College students, listen up. We're going to talk about saving up to $2,500 today in tax credits. There are two main types of tax credits you have to know about. The first is the American Opportunity Tax Credit. It's generally known as the more generous one, so let's start with that. This credit, there are a few ground rules. You must have a social security number. You must be a student in the United States. You must be enrolled at least half time, and you must be in your first 4 years of college post high school. So let's talk about how this credit is calculated. This credit is worth 100% of the first $2,000 you spend in qualified education expenses, such as tuition. That effectively makes that $2,000 portion free because every dollar you pay, you get directly back in the form of a tax credit. The next $2,000 you spend, up to $2,000, then you get 25% of that amount back in the form of a tax credit. That means if you pay $4,000 altogether, you'll get a $2,500 credit. If you pay $10,000, you'll still be eligible for that $2,500 credit. Please note that $1,000 of this is refundable, meaning that even if you pay no income taxes and you have enough qualified education expenses, the United States government will pay you up to $1,000 just for filing. That's a great deal. Let's move on to the lifetime learning credit. The lifetime learning credit has no halftime requirement. You still must have a social security number. And it doesn't matter if you're in your first 4 years of college or your first 10 years. It doesn't matter if you're a non traditional student and start later in life. The calculation for this credit is simple. It is 20% of up to $10,000 in qualified education expenses, meaning if you pay $10,000 in tuition, you get a $2,000 credit. Please note that this credit is non refundable, meaning if you do not pay any income taxes, you get no money back. Also, something you should note about these credits is that the modified adjusted gross income amount, where it starts to phase out or decrease for this credit, is $80,000 for a single person or $160,000 for a married couple. You are not eligible for this credit at all if your modified adjusted gross income exceeds $90,000 as a single person or $180,000 as a married couple. My name is Elizabeth. I'm a licensed CPA. My goal here is to teach you things that you should learn in school but didn't. So please follow along for more pieces of education about taxes and money that can save you money directly.